It's the Real Estate Podcast, across every state, city and town of Australia.
And welcome to another episode of the Real Estate Podcast, available on iHeartRadio every morning, also on Spotify and Apple and wherever you get your podcasts from. It's a Wednesday morning, the 10th day of August for 2022, and coming up, Sally Tindall is here. We're going to be talking real estate that includes RBA predictions for September and what the rise might be this time round. We'll also talk fixed rates and a whole lot more. Olivia Newton-John, what a sad day yesterday was with her passing. I remember in the late 1990s when working in radio, we took a bunch of winners to a Cliff Richard concert. Can you imagine? And Olivia Newton-John, she was really the support act. But I remember her absolutely entertaining and rocking the joint out. Cliff Richard, you can forget about him, not so much at all. She sort of stole the show, and I'll always remember that. So rest in peace, Olivia Newton-John. Now, if you're celebrating your birthday today for the 10th of August, have a great Wednesday. You're sharing it with Antonio Banderas. He is turning 61. Riddick Bowe, the boxer, is turning 54, and Kylie Jenner, if you care about her birthday, she is turning 24.
From first home buyers to property investors and everything in between. Every morning on the Real Estate Podcast. We are just as addicted to property as you are. Every weekday morning from 6:30. It's the Main Centre Forecast with propertybuyer.com.au.
Around Australia we go, and checking on your weather. Firstly, in Sydney, expect a possible morning shower and 18 degrees. Melbourne, some cloud hanging around, but it should be a mainly dry Wednesday, and expect a high of 17. Good morning, Brisbane. Expecting blue skies, and 21 is your forecast high. And in Perth, a possible morning shower, and your top today of 17 degrees.
It's the Real Estate Podcast, across Australia, 7 days a week.
Well, there is always so much to talk about here every morning on the Real Estate Podcast, and we are certainly well past the highs of previous conversations around these record-breaking prices being paid and red-hot clearance rates and FOMO behaviour that was peaking into a frenzy. It is very much more at a sedate and tempered pace. So let's bring in Sally Tindall from RateCity, who doesn't travel at either of those speeds. Good morning, Sally. Great to have you back.
Thanks for having me back.
The UK looks pretty messy at the moment, with their inflation running more than where we are at. They're talking about that recession knocking on the door by the end of the year. The US isn't looking great either. It makes you wonder whether or not Australia can avoid the same thing.
I do think that we can look to overseas and get some clues about what might be ahead of us. However, we've got to remember that Australia does have a unique set of circumstances and challenges as well. And so it's not, a set in stone that the UK will even go into recession, but certainly if they do, it doesn't mean that we will automatically follow suit. One of the most interesting things to remember, particularly when you're looking at the US and New Zealand, we are more sensitive to rate hikes than some other economies. Why? Well, there's two reasons for that. One is that fewer of us are on fixed rate loans, and so we feel these rate hikes far more quickly than you do over in the US, where fixing for 15 to 30 years is incredibly popular, or even over in New Zealand, where the majority of borrowers are on fixed loans. At the moment, we estimate that there's around 38% of borrowers, home loan borrowers, are on fixed rate loans, and the rest are on variable and feeling each rate hike as they roll in. The second reason would be that we are, in some cases, some of us who bought recently, potentially with small deposits, took on large loans compared to our incomes, we're up to our eyeballs in debt. So, that could mean that we need fewer rate hikes to get the inflation problem in hand. The RBA has alluded to this in what they've said in speeches and things like that.
And yeah, talking of the RBA, in particular the governor, some think it's time for somebody new. It's a bit like, I guess, an Australian cricket captain who has come up against a better team, but they decide to change the captain anyway. So I guess, do you think this would be a confidence boost to the market or a different mindset if Philip Lowe was politely asked to move along?
Well, I think that the RBA and Governor Lowe have been doing a pretty good job in what have been unprecedented and in many cases very difficult circumstances. I mean, no one really knew what was around the corner when COVID first hit. Yes, the RBA cut the cash rate significantly and, as Governor Lowe said, took out perhaps a little bit too much insurance to protect people from, what was ahead when people were staring down the likelihood of, significant health concerns across the nation, but also significant job losses. And that didn't materialise. And so people are now looking at the RBA and Governor Lowe in particular and horrified by the rapid rise to the cash rate. But we really need to get some perspective here. I know that borrowers don't like rising rates. That's fair enough. But the cash rate was at emergency setting levels at 0.1%. It couldn't stay there for much longer. Because why? Because the RBA, when the next emergency comes around, they need to be able to pull that lever. And so it was very reasonable for the cash rate to rise. I think perhaps Australians were prepared for the cash rate to rise, but they weren't prepared for the size and the scale of the hikes that we've had to date. We've had 4 cash rises in as many months and people are feeling rattled. So perhaps there's a communication exercise that could have been done better. But all in all, when you compare what the RBA has done to other economies around the world, I do think that they're doing a reasonable job.
Yes, rises are rattling people. Well said, that's exactly right. And let's actually have a little bit of a projection to the first Tuesday of September, Sally. What's your prediction? Is it going to be a 50, a 25, or will there be silence, crickets from the RBA and a little bit of a break? Or is that wishful thinking?
I think you can rule out the break. I don't think there will be crickets, unfortunately. I do think that there'll be another hike. I do think it'll be another double hike. The RBA has said that they need, they're prepared to do what it takes to get that inflation genie back in the bottle. And the faster they move on this and move early, the more likelihood they are of being able to clamp down inflation. It can really, get a life of its own if you don't act quickly, and that's what the RBA is doing. Yes, as we said, people are rattled by these quick hikes, but the cash rate is still only at 1.85%. Historically, that's still relatively low. And certainly, even when you look at the retail spending, again, it was up in June, which is, pretty surprising considering at that point in time we'd had 2 rate hikes. I do think it'll start dropping back in July, but there aren't huge signs that we're all cracking under pressure just yet.
Yes, and talking of cracking under pressure, a couple of days ago on Monday, I was talking with Warren Hogan about first home buyers who turned to the bank of mum and dad to help them with their first property, because when mum and dad helped them, we were in the high times and we're not there right at the moment.
No, we're not there at the moment. I mean, I guess the good thing is that, rising cash rate is happening against a backdrop of, unemployment levels that haven't been seen in decades. We're sitting at 3.5 and it's forecast to drop even further in the next set of data. So, it is actually a good time to get a job, and particularly if you lose your job, you can ideally find another one. Regardless of what the environment is, if you are thinking about being a guarantor for your children, or if shoes on the other foot and you're someone that's hoping to get into the property market and asking your mum and dad to step up for you, then it's a really good conversation to have. People need to understand what they're committing to when they do sign on as a guarantor. If your children can't make the mortgage repayments, the bank will turn to you to step up and make it for them. And that can put a strain not only on both sets of finances, but also on that relationship. And so it's really a good idea to get independent financial advice and independent legal advice before becoming a guarantor.
And what have you been making of these different speeds, like the Adelaides, the Brisbane, that are coming back into line? Because they were running at different speeds. We talked about it the other day. The Adelaide is now back in line with a Melbourne, for example.
It's interesting to see property prices at the moment. Certainly Sydney and Melbourne, they've been dropping for a number of months now, and that trend is very clear. You only have to go to an auction and see it get passed in Sydney to know that clearance rates and prices are on the decline. Adelaide has held its ground so far. The latest CoreLogic figures show that it was up 0.4% in the most recent month. Year to date, Adelaide property prices, they're up 11.6%. But I do think we're sitting on the cusp and the tide is turning for Adelaide in particular, that we could start seeing drops in Adelaide in the months ahead. Certainly, NAB's latest economic forecast shows that Adelaide is set to rise 9% from the beginning of 2022 to the end of 2022. But as I mentioned, Adelaide's already up 11.6%. So that actually suggests that it's going to fall 2.6% in the remainder of this year.
Good on you, Sally. Well, we'll leave it there. Plenty to think about. And once again, thanks for coming on to the Real Estate Podcast this morning.
Thanks for having me back.
We connect you to the best real estate information across Australia. The Real Estate Podcast.